do you own something in that situation? Hey, my title, my deed says you must leave. Okay, well, I have a bazooka and I'm going to just take this, right? Remember
This
bazooka
is
bubblegum?
this is taking a
And
very different turn.
this is Byron Lazine and Nicole White, and you are tuned into episode 301 on The Real Word.
Word is up. 301. Doesn't that feel good?
Feels great that we're on the other side of
On
300.
the other
Great
side.
little, mini intimate event that we had last week to celebrate episode 300 with some friends and some close people over at our development in Connecticut, 66 High Street. That was fascinating. You can go check out the replay, obviously, if you missed that. But you don't want to miss this headline from Grant Cardone. Some people on the internet call him Uncle G. Nicole, is that what you call him?
I had to ask you what he did, so
Yeah.
there's no Uncle G over here.
Nicole had to ask me what Mr. Grant Cardone does. He has a big sales company. He's written a bunch of books, but he also is the controller of over $4 billion in apartment real estates across the country,
Yeah.
most of it in Sunbelt locations, a lot of it in Florida. Okay, so that's where he's built the majority of his wealth. There's been some controversies with Grant. He syndicated a bunch of money. He was probably, I guess, the first person ever to go out and get money from non-accredited investors. He has a huge social media following. So he went raised money from non-accredited, just regular average people to be able to invest in his fund. One of those ended up suing him. Anyways, The Real Deal wrote a big story about it, and he ended up winning that lawsuit. And they've gone back and forth. He's attacked The Real Deal for defamation and or alluding to defamation. I shouldn't say that because I don't think he's filed any countersuits, but it's been an interesting battle. But that's not what this is about. This is about the fixed mortgage in real estate. Let's first take a look at the TikTok from Grant. We'll play the TikTok where Grant basically says we are headed towards a renter nation in the U.S. Let's play the clip, then we'll react.
America will become a renter nation. You will rent and use everything. You will rent your cars. You will rent where you live. You might even rent your clothes in the future. A mortgage is just a fancy way to say you own some shit that you don't own. The savior of America will not be lower prices. It will be longer mortgages. In your lifetime, you will see mortgages go from 30 to 40, 50, and maybe even 60 years. You could, if you live long enough, see a 100-year mortgage in America in order to give you the illusion that you own something when you don't.
Okay, Nicole, a couple key things that Grant Cardone says here. He says that we are becoming, or we are, a renter nation, that U.S. consumer will rent and basically use everything from a rental relationship, rental perspective. So that's the first point. Renter nation, you'll even be renting your clothes, Nicole. Now, does laundry happen in between? I have a lot of questions about renting clothes. I'm not one that I think I won't be a fit for that, but you never know.
Never know.
Do you own your own house? It's point number 2. So
Yeah.
when you buy a house, do you actually own it? And then the third big point he makes there, short TikTok for this many points. But the third point he makes there is that in our lifetimes, we will see a 60-year, maybe even 100-year
Well, he's stating that
mortgage.
that's going to be the savior, not lower prices, but these extended mortgage.
Right now, through the rest of 2023, use code FROSTY to get 25% off of BAMX. This is the biggest discount we've ever done, and everyone who locks in at this rate will be grandfathered in at the lowest rate of all time. Use code FROSTY on the annual subscription to get 25% off the full year for BAMX, where we release all of our downloads, all of our show notes from the hot sheet every single day, as well as our courses uploaded new every single month, live streams, and our private community. Use code FROSTY, get 25% off, and become a BAMX member today. Right, that'll be the savior for, essentially maybe the debt of the dollar, the affordability issue, how much further your dollar can go.
Yeah.
All of that. I've got some interesting stats that you may or may not know, meaning everybody, all the listeners, you may or may not know
Yeah.
about the 30-year fixed, which is our most popular mortgage in America. But first, let's go through the first 2 points, and then we'll get into the potential 100-year mortgage that
Okay.
Grant Cardone is suggesting here. Renter Nation, do you think we're heading towards a society where we rent everything, even our clothes?
I can't imagine. I don't want to rent my clothes. It's interesting though, I mean, because again, he's talking about the mortgage essentially being a rental. Most people probably have car payments, they have leases. Um, I don't
So
know
when you
that
have a
I've
lease, you're
ever
obviously renting. You don't own it. That's a rent.
what?
Leasing a car.
Yeah, right. No. I'm
Yeah.
saying so like we're already essentially there. I think and again, I think most people do leases because it's the only way to make it affordable, you know? You want a bougie car and you can't afford to buy it, so you lease it, right?
Yeah, actually, I saw a clip the other day. Somebody, everyone walks down the sidewalks now and just asks people random questions with the little TikTok mic. He asked this guy, he said, "Hey, do you
Okay.
rent or lease your car?" He goes, "I lease." It was a professional looking guy.
Yeah.
And he said, why do you lease a car? He goes, "I just always want a new car when, 3 or 4 years is up and it's a lower payment.
Yeah.
So that's
Lower
why I
payment.
do it."
And again, I mean, obviously after the 3 or 4s are up, like your warranties expire too. So, I mean, it's not a terrible gig.
Now, I don't have a lease or a car payment on my car.
Okay.
So I own it, but if you want to get technical, this is where somebody like Grant Cardone would push back. He's like, "Yeah, but do you pay taxes on the vehicle? Um,
Insurance.
do you pay insurance on the, if you want to operate it?" I actually don't know that I pay. Do I pay car taxes in Florida? I can't remember. It's registered in Florida. The taxes are definitely lower than where it was in Connecticut, but the insurance is way higher. So if I want to operate the vehicle, I gotta have an active license. There's a small fee there. I
Yeah.
gotta have insurance, huge fee, especially in Florida, some other states I know. And then sometimes you pay property taxes on your car.
Mhm.
And so you can't use it on the roads without those taxes. Taxes is a form to, what I think Grant would push back on here of rent. I think he's using a little bit of hyperbole when he talks about you'll rent your clothes because, he's just making the point that people rent their transportation now. They go and get an Uber app.
Yeah.
If I lived in a location, I'm not a car guy. So if I lived in a location where I could do more walking and Ubering, I too wouldn't own a car,
Yeah.
right? I mean,
Yeah.
when I have a home in Connecticut, no car there. I rent cars from
Right.
Hertz all the time.
Yeah.
So I agree with him. There are certain
People do rent their clothes though. You have that rent the runway. People do get boxes of clothes and rent them and then send them back. It's
and send them
essentially
back.
yeah, it's like a Netflix, you know, you pick what you want, you rent like if you need a gown, instead of buying the gown, you rent it's called Rent the Runway. Yeah, you get a whole box of stuff, you wear what you need to wear, and then you send it back.
This must be fancy stuff.
Not all the time. No, yeah, I'll send you the link. Rent the Runway.
Huh.
No, you can get like pants and sweaters and stuff too, I
Yeah.
believe.
Interesting. I just don't want I don't want used clothes. I don't know.
Yeah.
I mean, I guess I'm comfortable renting a bed at a hotel. Somebody else sleeps in that bed, the night before, but I don't know. I'm not comfortable the clothes thing. I also think clothes is something that, for average clothes, not designer clothes, but average clothes, the price is just going to come down in the future. Think about 3D printing, the opportunity for people maybe to, access cheaper clothes could become it just could become more accessible in the future. I'm not an
Yeah.
expert in that field by any means, but you could see where technology could potentially help people get cheaper costs for clothing.
Yeah, I
All
mean,
right,
these
so
dresses are like, $800 and you can buy a package, you can for $80 a month, you can get, a certain amount of
I can,
clothing.
I guess that's one way to stay with a fresh fit,
Yeah.
as the kids would say.
Fit. Look at you.
Is that the word? No, drip, fresh drip.
No, well, drip is different than fit.
No, I think it's the same.
Is it?
Uh, all right, so
No.
renting
No.
renting everything. I would agree that we are this consumer economy of the US would definitely lean towards more rental than ownership in the future when you think of all the commodities in our life, Uber being a great example of just that. Now, part 2, he basically makes the claim here
Yeah.
that you do not own your house. You think you own your house, but you don't own it.
Right.
Do you agree with that? When people buy their home, do they own it? Do they own it?
Yeah, I mean, I think you own it. I mean, because essentially you're able to do what you want to it. If you're renting, you can't. Your rent isn't, like I mean, obviously if your taxes change, your mortgage will go up, but your payments aren't going up. The rent's not going to be altered. You're not going to get kicked out. I mean, what if somebody offers you double? Are you going to kick
It,
them out?
it it's a much more stable position to be
For
in. You're
sure.
not you're not dealing with a property manager who could be a good person or somebody who's a pain in the butt. You're not dealing with, in terms of a lease that, to your point, you could go up. You're not dealing if you now you might have an HOA and you might not be able to do certain things. You
Right.
might have restrictions, but if you own certainly rural America, where you have the ability to do whatever you want to your land, you have much more freedom
A lot
in
more
the
freedom.
decisions that you can make. Now,
Right.
to where Grant would go with this argument, just to play both sides of this, is you're always going to have to pay property taxes. And really, honestly, in the history of the world, not just America, in the history of the world, nobody has ever really owned anything. If somebody wants your land and they come in and show force, okay, you're either going to have the artillery to win that confrontation or you're going to move aside. I mean, just all the wars, they've been over religion and land, territory,
Yep.
right? Most of the time. And so, do you own something in that situation? Hey, my title, my deed says you must leave. Okay, well, I have a bazooka and I'm going to just take this, right? Remember
This
bazooka
is
bubblegum?
this is taking
And
a very different turn.
well, I mean, I guess I'm just making the other side of the argument. It's like,
Yeah.
do you technically own anything? No, but when the answer to that is no. But when you own your property, your single family residence, versus renting it, you own the freedom of having the decisions at your disposal,
Right.
of not having somebody micromanaging you where you live.
And you're
A-
investing in your own investment too, like if you do the kitchen, you're investing in, obviously what, your return on that would be instead of doing a kitchen and it being somebody else's kitchen to make money off of.
Yeah. And so the good news is for us real estate professionals is there's always going to be a large percentage of the human race that wants less micromanagers in their life, especially where they live.
Right.
My wife always like, I want home to feel like home. I'm more of a guy. I could probably fit in line with. I just want to sleep. I just want to sleep. I don't. I'm not somebody who wants to be home all the time. But there are a lot of people like my wife who's like, I want it to feel like home. I want it to feel a certain way.
Mhm.
I want to, make it our own.
Yeah.
Now let's get into the mortgage. This is what's really interesting.
Very interesting.
Okay. Uh, Grant says what's going to save the U.S. consumer
Yeah.
essentially is this 30-year fixed rate is going to go to 40, 50, 60 in our lifetime, maybe even 100-year mortgage. Now, the United States of America is the only country that has a 30-year fixed mortgage as an option for home buyers. We're the only country that does that.
Yeah.
Period. End of story. No other country offers it, not even our neighbors to the north in Canada. In fact, if you talk to Canadian agents, they're talking about every 5 years, the homeowner's got to refinance that deal. Okay. So they go through a lot of refinances in Canada. But here in America, we have this 30-year fixed tool. It's what has helped uh, more people gain wealth in this country than any other country in the world. This ability to access a 30-year fixed mortgage. Now, most people don't hold the mortgage for 30 years.
Right.
Most homeowners are actually, they're not going to live in the house 30 years. They live into it, about 12, 13 years. But the average, according to Rocket loans, Nicole,
Yeah.
the average mortgage length is actually just under 10 years because a homeowner will either refinance
Okay.
or they're at that point where they will, they'll go ahead and they'll buy another house and they'll sell that one so they pay the loan off.
Right.
So banks and lenders aren't actually, seeing all the interest on 30 years. This is why, why is the 30-year and the 10-year tied so closely together? Because if you're an investor making a long-term investment in mortgage-backed securities, you're looking at, okay, well, what's my guarantee no lose on the 10-year? Oh, the 10 years, it's at just under 4% today, right? On the 10-year treasury. Well, that's like a guarantee. Well, if I know I'm going to be holding the 30-year fix on average for about 10 years, it's going to be more risky than the government back in the 10-year treasury. I'm going to want 7%. I'm going to want 6%. And that's where you always see that spread between the 10-year and the 30-year. When the 10-year comes down, you see the 30-year typically follow. When that 10-year bumps up, you're going to see the 30-year go up, because if I'm going to invest in 30-year mortgages, I'm going to want a little bit more because I can just go to the 10-year treasury,
Right.
right? And so that's one way to think about that relationship between the 10-year and the 30-year. Now, so that's the basic history lesson on the very basic on the 30-year fixed mortgage in our country. Now let's answer the question. This is a projection that Grant is proposing.
Yeah.
Do you believe that we'll see? And there's a lot of buyers right now. They're like, let's start this January 1. Do you believe we'll see a 40, 50, 60, or 100-year mortgage in our lifetime?
I mean, I wouldn't put it out of the realm of possibility. I feel like though it's still, I think that you would have a higher rate. Um, so I don't know how much it's actually going to be potentially. I mean, it'll probably be saving you because it's obviously a longer term, but I just think your rates would go up. I mean, it's the same as looking at a 15-year and like a 30-year, you know. You can usually save yourself some money if you did 15 and not if you go 30. So I wouldn't be surprised if there was something in our lifetime. I mean, I don't want to live forever, but I think I still have at least 50 years left to go. So I wouldn't be
Yeah.
surprised. Yeah.
No, this wouldn't shock me at all, for there to be a 40-year option. Yes, at a little bit of a higher rate, which benefits the bank. They're still going to be out of the deal in 10 years, Nicole.
Right.
That's the point.
Right.
If a 30-year fix, most consumers are getting out of the deal in 10 years, they're not going to stay in the 40-year for 20. They're still
Right.
going to refinance in 10. They're still going to buy or sell again in 10 years. They're lowering that payment, but the bank's collecting more interest. Okay, so everybody wins, especially in a world where I believe single family homes are just going to get more and more unaffordable for the everyday American. So this is a way for, if you've got Congress support on this, if you got Fannie and Freddie support, if you got bankers support, if everybody's in support, where it's like, hey, we're going to go help out affordability for the lowest income, buyers in America, I could certainly see this happening. And to your point, yes, with a higher rate. I think he's absolutely right about we will see this one day. And there have been 40-year products, that have kind of sprinkled about. They're not prominent like the 30-year fix, but I think there's been a couple of options that have popped up, at times for potentially 40-year. Will it become the norm? Yeah, I think it could.
Yeah.
When that happens, not soon enough for many buyers, for sure. 100-year, I think is probably
Not
not gonna
I
probably not gonna
agree.
see that for a
I
lifetime.
don't
Now,
see that either. Yeah.
but think about some of the prices in, some of these other countries. America, you look at London prices, America and even New York City become cheap in comparison to London. So as the value of the dollar reduces, you could see a case where, okay, the values get up so high that you've got to do something on the mortgage. But we'll see what happens. There's Grant's thoughts. There's our thoughts on reacting to that. He's got a lot of headlines lately talking about the biggest. Don't let your single family consumers look at his headline of the biggest real estate correction of all time. You got to dig deeper. That's another headline he has out there. That is commercial and apartment buildings that he's talking about there. So Grant's making some headlines. Good for him. He's
Good
a
for
PR
him.
genius.
Let's go.
Love him or hate him. He's getting the attention on his brand. Just make sure you dig deeper so that your consumers don't get confused on that. Nicole, we're done until 2024.
That's it.
Yeah, we got nothing next week. We're taking a little
Christmas
real
vacay?
word vacay from for
Well,
the end
Merry
of the year.
Christmas,
So
everybody. If you
yeah,
celebrate.
absolutely. Happy
Happy New Year.
holidays. We'll come back with episode 302 on Tuesday, January the 2nd. In the meantime, use code FROSTY, not code real word, use code FROSTY to get 25% off of BAMX, the biggest discount ever. Use code FROSTY to grab the annual on BAMX. We'll see you guys in a couple of weeks.
See you guys.